Hello, I'm Darren Mish, and I'm here today to discuss the IRS audit process. There are basically four types of IRS audit. The first is the typical IRS audit that you think about when you hear the word audit. You get a letter that says, bring all your books and records for tax year so-and-so to this address on this date and time. This is called a face-to-face audit, and it's often conducted at an IRS Taxpayer Assistance Center. These audits tend to be less complicated and oftentimes less serious than their counterpart, the field audit. The field audit occurs in the field at the taxpayer's place of business or residence. These audits can go on for quite some time. In my opinion, there's a tendency for IRS auditors who are made comfortable at the taxpayer's place of business to linger there for extended periods of time. What I mean is that the normal inclination is to be cordial, in fact bend over backwards in terms of kindness towards IRS auditors when they're conducting an audit of your business. I would actually suggest quite the contrary. The less comfortable they are, the quicker the audit will be completed. I'm not advocating rudeness, but I do want you to understand the correlation between making them too comfortable and your audit continuing for months on end with no end in sight. The third type of audit is the correspondence audit. The correspondence audit is typically more minor in nature. It commences with a letter indicating that there are potential problems with your tax return that the IRS wants cleared up. They typically will provide an address to submit your response to and a deadline to respond. The last thing you want to do is to fail to respond to such a notice. Many times, the additional documentation that's submitted in response to a correspondence audit can end the inquiry early. On the contrary, a correspondence audit can turn into a more complex audit if the response is inappropriate. The last type of IRS audit is when the taxpayer fails to file a return at all. The IRS will send letters requesting that the taxpayer file the missing return. If there's no response or the taxpayer fails to file the missing return, the IRS will prepare what is known as a substitute for return, or SFR. When the IRS prepares the substitute for return, they give the taxpayer a single exemption, a single deduction, and then calculate the tax based upon what's left. This is obviously inaccurate, and everyone at the IRS knows it. It's designed to get a tax assessment on the books so that the IRS can begin collecting. You see, prior to that assessment, the IRS has no legal right to collect and therefore can't come after the taxpayer for the money. The last thing I want to do is explain how an IRS audit usually ends. Typically, the auditor will begin to pressure the taxpayer to sign the audit report with some pressure exerted. They'll say things like, it could be so much worse. If you sign, I won't go into this other big problem that you have on your return. In my experience, this is really nonsense. The auditor already has disallowed everything they possibly can. There's pressure exerted upon the auditor by IRS management to get signed audit reports and close the case. What I typically have my clients do is refuse to sign the closing agreement and file an audit protest. Once an audit protest is filed, the case moves to IRS appeals. In almost every IRS audit case we handle, we end up filing a protest. Once there, negotiations usually begin in earnest. The IRS appeals officer must be mindful of the hazards of litigation, meaning that they have to weigh whether you may win if the case were to go to tax court. If you can't settle the case at IRS appeals, the IRS will issue a notice of deficiency. Once a notice of deficiency is issued, you will have 90 days to file a tax court petition. Once you've filed the tax court petition, the case will oftentimes go back to IRS appeals for negotiation. If it can't be settled there, typically there will be some opportunities to settle with IRS counsel before trial. If you end up in trial in tax court and an assessment is eventually made, then the case will be turned over to the IRS Collection Division if payment is not made relatively quickly. That's when federal tax liens, tax levies, and seizures can begin to occur. Wow, that was a lot of information from one video, and I hope it helps if you're currently going through the IRS audit process. I'm Darren Mish, and for everyone here at the firm, I'd like to say thanks for watching.